It's Tuesday, April 30. It's 8:23 a.m. now. So the market opens in a little bit more than an hour from now. So there are 5 levels on the board. We will use these levels to trade against in the E-minis. And it didn't point out yesterday, it maybe talked through it, that we had a level right above. It was 5, 10, 18 or so. That after the market closed, the spiders just kind of shot back up and hung out at this level for a while. They've come a little bit lower in the pre-market currently. Of course, it's over an hour before the market opens, but the pre-market is currently at 509.90. And as I mentioned before, not too surprising to expect that since the FOMC announcement is going to be on Wednesday, the meeting today and tomorrow leading up to that tends to be pretty slow in the market. There could be some action in the morning, but I don't expect to see huge moves until after the meeting in the afternoon. I think it's 2 o'clock. I'll double check. It usually is 2 o'clock when that announcement comes out and the market starts going crazy. So anyway, so these are the levels for today, and we will circle back around to this chart and take a look at the trades in the E-minis that were taken based off of these levels. Thanks, and see you then. Here we are at almost 7:45 p.m. You can see that the spiders just fell completely off our chart, at least lower than our lowest calculated level from the morning. Let's move this up so we can see the entire picture. I think it was just yesterday, I believe, on Monday, that I said I had an opinion that the SPY was due for another leg lower. I also said that I don't like predicting larger moves. My thinking at the time was that because the market is waiting on an important FOMC announcement, which hits the airwaves on Wednesday afternoon, that leading up to that point in time, the spiders would probably be slow. They usually are on the Tuesdays and Wednesdays before those big announcements from the Fed. But what happened today? Well, you can disagree with me if you want, but I think they're trying to make a leg lower, as I suspected. Don't know if there will be follow through tomorrow. I haven't really done much analysis since the market closed today, but a 75-point S&P drop isn't insignificant. That's the quick math I just did. And by the way, the official close of the spiders today was exactly the low of the day to the penny. So they moved today. It was just a little earlier than I thought they would. Anyway, what do we have today as it relates to our levels from the morning? There were 2 very easy trades, and I think a couple good examples to teach a few things, at least to reiterate some things in regard to the rules of the strategy that I use. So after 9:45, spiders looks like they were heading up to 510.06. I had an order to sell. Planned to sell 3. I was really looking forward to being on the short side today. I expected they would drop some, just not as much as they did. But anyway, I wanted to sell 3. I was going to buy 2 back at a base hit, trail the other 1 for as much as I can get. And it's just as well. There was some bouncing around. That didn't happen. They never got that high, a little bit of weakness. But when they came back down into 508.30, operating level 508.35, bought 2 contracts. They bounced, made a base hit. Just took a base hit off. You'll see these. I recorded both of them. 506.55, operating level 506.60. They bounced. Got a base hit. Also pretty interesting. They came up a penny short here on the other side. So keep in mind, this is the actual formula-derived level. So I like to add a 5-cent buffer. So while they came up here later in the day, I mean, this is not, I don't trade them this way. You can, it's up to you, because the levels are important. It was a penny away, 506.54. But what do? I would trigger that at 506.50. So it would have worked. And I also identified a couple levels down here, which you'll see on the trade. I didn't take them. I was not interested. Plus, it was really close to 3:30 at that time. So why don't we just jump into the recording? We'll talk through it then. Well, I thought I had this first recording sped up, but I don't. So I can just scrub ahead. This is real time, around 10:30. Right before 10:30, they were coming back down into 508.35. And I'll scrub ahead so you can see when they triggered that trade. I'm just going to go slowly here to show you that I pulled 4 points out after they established support. Right there. So that first level was satisfied. And I believe this recording takes me to the next level. Came down to 506.60. So there we go. Triggered that one. And I'll scrub ahead here a little bit. They bounced. And there's my next base hit. So it's almost like they just handed over the base hit and they continued lower. They didn't do a whole lot after this. stopped this recording and I was at the office later. Well, here, I'll just let this play through so you can, or play out. So I identified this zone down here, and this recording stops, I think, around 12:30 or so. Went into the office 30, 40 minutes later. I'm looking at it, and they weren't down there yet. So I just went ahead and started recording again. I had no intention of buying down here. This was, so here's the lessons, I think. These levels here created a zone, is the type of information that I'm teaching in this course. Like, how would you identify this? It's not something coming out of the calculator in terms of the variables that go into calculating these levels in the morning. So this is a identify in real time kind of level, and one worked really well. I didn't take the trades. I wasn't interested. I think it was close to 3:30 when the first one was hit anyway, and it was a very precise hit. You'll see it actually happen in the later in the next recording. And then when the trap door fell open and they just fell, they fell right through 360. But that was after 3:30, which the second lesson is, just reiterates why I don't like to trade or enter trades after 3:30. You don't really know what's going to happen. So let me just speed this up. I don't think there's anything of note, of importance here. There's not. So let me just jump over to the other recording and we'll take a look at the last part of the day. So I have this recording queued up to right before they come down into 504.20. Again, I did not take the trade. I was happy with the 2 base hits from the morning, the way the market's acting. It's kind of volatile. And, expecting that there was going to be a leg lower sooner than later. And since things weren't acting quite right before the FOMC, typically Tuesdays are really slow, Wednesdays especially, before the afternoon announcement, I just was happy to take my 2 base hits. But I'm going to play this. And while I didn't take the trade, I just want you to point out that they came down to 504.20 to the penny and pulled up. Would have provided a base hit had you chosen to take that trade. Once again, this levels is something identified in real time. As it came down to it, expecting they would come maybe somewhere in here and provide a bounce. But by the time they got up, they went higher. And they came back down to the next level in this zone. That's when the trap door opened. Why I don't like to trade after 3:30. You can see the clock in the lower right-hand corner, what time it is. Speed this up to, here we go. And at some point I turned on, well, as they got close to 4 o'clock, I turned on the after hours 24-hour session just to see what it would look like, what they were going to do in the 15 minutes or so after the market closed. Well, the features are open until 4:15. And it's kind of cool. They spiked up right in this zone, came back down. I was kind of curious why they went this low in the post market. It's really not all that important, but I did put a line there just to go double check later. Really didn't see anything of significance, maybe a Fibonacci retracement or something, 75% I think it was from the most recent low. But anyway, the recording just started over again. So I'm just going to jump out of this and go back to the full day. So here we have the levels adjusted to show where they were when the trades were triggered. For 508.35, long trade, bounce. 506.60, long trade, bounce. And I just put this level down here because they hit it to the penny. It was pretty cool to watch that. Right before the my line in the sand to when I stopped taking trades. So the high was, or the low of this candle was 504.20. So pretty cool. Let's take a look at the tracking log and wrap this up. There is no difference between the logs, playing by the rules, 2 base hits, coming down, and from B to A, or the level in column B to the level in column A, and then it's the same for me. You saw what I did, and you can just examine the averages as they are currently. And it looks like the video that I posted this morning has gotten a few views, a couple comments, so apparently there was some interest. I hope there will be. I will continue to do this and provide these daily levels in the morning just on YouTube for whoever wants them. And then once the course is live and the subscription part is live, then that will cease to be the case. But for the time being, there's no reason I shouldn't, share the wealth and let people have these. So anyway, I hope you found this interesting and helpful. If you have any comments on this approach or you agree with it, I'd feel free to comment under the video. Just trying to get a little bit of traction here. Consider subscribing if you haven't already. I appreciate those who already have. Thanks and have a great day. See you tomorrow.